After reporting earnings, Intuit is up over 10% and it is expected to go even higher tomorrow. Today, we're going to do an analysis and see is this stock worth investing in or something we should skip as long-term investors. We don't care about short-term hypes. We want to know if we can invest and rest and not have to worry about any of the other stuff. These are all its current metrics. As you can see, in its last quarter, it almost made $4 billion. For us to get a stock price for this stock for 2030, we need to analyze and project what these metrics could be in the future. Now, before we get started, I want to just highlight the insanity that just happened this quarter. Usually, it had an EPS beat of single digits. This quarter, it was 29% almost. So with that being said, let's get started with the revenue numbers. Now, its revenue was $7 billion 5 years ago to today being almost $17 billion. That is an over 2x return in revenue. And if you take a look at it, it had some of those years where it had 80% gain in revenue. It had 60% gain in another quarter. As you get closer to modern day, the growth rate starts to slow down. I mean, it was growing above 20%. Ever since June of 2023, it has been in the teens. It's able to maintain this teen number, but we do see a bit of a concerning factor that it has such a massive drop off. And is this a pattern for future projections? Meaning, will it start going down? Will the growth rate start hitting single digits in the near future? So first, let's go ask ChatGPT what it thinks the revenue numbers will be by 2030. ChatGPT thinks it can reach 30 billion by 2030. I think that's possible, but it's a bit too high if I'm being honest. Claude saying 32 billion, so around the range of what ChatGPT thinks. DeepSeek saying 29 billion, same ballpark number. And if you ask Claude, it thinks 33 billion. So the ballpark number for all three of them is 30 billion. So I'm gonna go with 30 billion and say it's gonna have a revenue beat over the next 5 years of 80% from today's $17.2 billion. Next, we're going to take a look at number outstanding shares. Now, I am a bit surprised the fact that it actually diluted the shareholder. 5 years ago, it had 264 million shares to today having 283 million shares. That is a dilution of almost 7% over the last 5 years. Now, I'm going to say that the dilution will be slightly less because I don't think they'll need to have that much capex spending in the future. The dilution is going to be 5%. Plus, the stock price will be higher, so they won't need to dilute shareholder that much because they'll get more cash and capital with my printing less shares. Next, we're going to take a look at PE. Now, its PE over the last 5 years has consistently been above 40. I mean, I can't find a single quarter where its PE was below 40. But last few quarters, like I said, it had hyper growth, like insane amount of growth. But when you take a look at its overall picture, it had moments where the PE fell into the 20s. It had moments where it fell into the 30s. When the market is good, business is booming, it has a PE above 40. I think we'll have a little bit of turbulence over the next 5 years. That is why I want to be a little bit conservative. But before I do, I want to compare the growth rate to the PE for this stock. So when we take a look at its PE, every time it has a growth rate above 10% in any given quarter, its PE is above 40. But the minute its growth rate starts to fall, as you can see by these spikes that go downwards below 10 or close to even 10, its PE starts to fall. And you can see it gives you a jump scare every time. I mean, it has a PE drop of 10 to 20 multiple when it deliver on a 10% growth rate. Now, this is very scary, meaning if in the future, whenever it has a growth rate below 10%, its PE degrade by 10 to 20%. Take a look at this spike. In 2022, its PE was above 80. It couldn't deliver 10% growth. That same year, its PE fell below 50. And then there was another spike over here where PE went to 66%, but it couldn't deliver 10% growth. It drops all the way to 55. I am going to be very, and I'm being honest, conservative on this measure. I think in the future, you can easily get 40 PE, but I also think being conservative is more important to make sure that our investment is secure. So I'm going to go with 35 for PE. And lastly, when you take a look at profit margin, it's 17.6%, which is very disappointing. It's a software company that is matured, built, and it has tremendous pricing power. They should be easily 25 to 30%. If you take a look at its 5-year profit margin, it used to be above 20%, but ever since October of 2022, it has fallen to 14%, and it hasn't really recovered that much. And now it's back to like 17.6%. So I'm not sure what's going on between that period. I don't know if this is a cause of them overspending on maybe AI related technology. That's pretty much been the theme for all of these companies that are software related. A lot of capex spending on AI. I'm not sure, but this has been a trend for them ever since October of 2022, where they dropped to the 15 and now they're at 17. But I'm going to say the capex spending will go down. They will have a better margin of profit, and say they're going to have a profit margin of 20%, which I think is a bit bearish on my end. I think it can do 30 to even 35%, but I want to be safe. When we plug in all the numbers, we get a stock price of $911, meaning if you were to invest into it, you would do 14% better than the S&P 500 on the price that is selling for today. Now, I can't tell you how better you will do if the price jumps up again tomorrow. But for you to 2x your money from the S&P 500, you need to buy this stock at $455.83. Will it get there? I don't think so, but that will be the golden price to enter this stock at. Let's say you think it can sustain its average PE of 45, then it has a stock price almost $1,200, which means you would do 61% better than the S&P 500, which means you get an easy 2.1x return from today's stock price. But I don't think you should have such a bullish outview. I think having a 35 PE is conservative and just smart investing, in my opinion. So I'm going to go with 35 and say if you want to enter this position, you should enter it below 500. If you haven't entered it yet and you're thinking about entering it, I wouldn't, honestly. I really wouldn't.